Mike, we haven't talked about these gigantic IPOs. What do you make of the, I guess, animal spirits, right? Or else they wouldn't be here. And the mechanical effects on the market. Surely some people are selling winners to get into whatever IPO they want.
Yeah, I mean, look, the market's been very receptive not only to equity offerings but debt offerings. I mean, it's been another kind of bonanza year. Not as strong as 2021, but I mean that's a sign of a healthy market, quite frankly, when you're absorbing this kind of supply. So it doesn't bother me. I think the collection of stuff maybe all at once can create some digestion problems, but there's plenty of liquidity out there. I mean, I'll give you one statistic which I think will help maybe understand this. Companies distribute income, whether through buybacks or dividends, and they do about $1.7 trillion a year. That's just income back to shareholders. Now, some of that's reinvested like dividends, but that's a lot of money, right? And then you have inflows from retail all the time and pensioners and asset owners. So there's capital out there. And so the fact that the market's absorbing these deals doesn't bother me. The collection in one quarter can create some, disruption, but I think there's capital to absorb this.
By the way, that goes to the heart of my main question. Watching this throughout the last months and years, right? Because spreads have been so tight and equity indexes keep running up. Investors have enough money to pile it into gold and things like Bitcoin. Where is all this cash coming from?
Well, don't forget, the bond market's been in a bear market for 4 years, okay? So what we're seeing is people are not reinvesting their bond proceeds, right? They mature and they're putting into things that can actually protect them against inflation, something we haven't talked about yet. Like the average asset owner is pretty smart. They figured out that, hey, that the biggest risk going forward is inflation, which is kind of my thought. Then I want to own assets that will protect me against inflation. That's not bonds, okay? That's equities, it's gold, it's silver, it's other real assets, and that's what they're doing. So there's a tectonic shift, okay, from the 60-40 to something that looks more like 60-20-20 or even 70-30, depending on your preference.